Hello everybody, this is Lara with your weekly video for gold for the week ending Friday 14th of October. I'm recording this video 8:20 PM Eastern Standard Time, so we should have final volume data from stock charts for the week. I'd expected a bit of a pullback to move lower. It has. It moved a little bit lower than expected, but it's remained above the invalidation point. The Elliott wave analysis pretty much remains the same as last week. This is the preferred Elliott wave count. It is bearish. It expects that low in December 2015 at 1046 will not be sustained. It expects that that was the end of wave A, and then here's the end of wave B and the start of wave C of a huge expanded flat for grand supercycle wave 4. So to see what that structure looks like, you need to view it on monthly charts, and I link back at the beginning of every week's analysis for you to monthly charts where I go over with text, charts and video that bigger picture. Expanded flat corrections are common structures, and their B waves move beyond the start of wave A, and the C wave should move substantially beyond the end of wave A at 1046.27. That's the December 2015 low. That's so that supercycle C will avoid a truncation and a very rare running flat. The target would see that achieved. This is a common Fibonacci ratio between waves A and C of an expanded flat. At 657, supercycle C will reach 1.618, the length of supercycle A. That target is years away yet. Supercycle C may only subdivide as a 5-wave motive structure. At cycle degree, that will be labelled 1, 2, 3, 4, 5. If my degree of labelling for this downward leading expanding diagonal for cycle 1 is correct, then supercycle C may only subdivide as an impulse. Within an impulse, wave 1 must subdivide as a 5-wave structure, 3 must subdivide as an impulse, and 5 must subdivide as a 5-wave motive structure. The other structural possibility for supercycle C would be an ending diagonal, and within an ending diagonal, all of subwaves cycle 1, 2, 3, 4, 5 may only subdivide as zigzags. So if cycle 1 is not a zigzag, but it's a 5-wave motive structure, that means supercycle C may be subdividing as an impulse. Within the impulse, wave 1 may be a complete leading expanding diagonal, wave 2 a very deep zigzag. Second waves following leading diagonals and first wave positions are very commonly deep, and so this follows normal behaviour after a leading diagonal. Wave 3 may only subdivide as an impulse. Within it, primary 1 may be over at this low, primary 2 may be continuing as an expanded flat. Expanded flat corrections are fairly common structures. They are labelled A, B, C, and they subdivide 3, 3, 5. The B wave of an expanded flat moves beyond the start of wave A, and wave C moves beyond the end of A. And so the target for primary 2 is, in the first instance, the 0.382 Fibonacci ratio of primary 1 at 1828.29. If it reaches that level and price just keeps on going up, then attention turns to the next Fibonacci ratio, this 0.618 ratio at 1919.03. Here's an example of an expanded flat. Intermediate 2 is an expanded flat. If I put the labels, A would be here, B would be here, C would be here. B moved beyond the start of A, C moves substantially beyond the end of A. That's a normal looking expanded flat. And so, at a higher fractal, 1 degree higher, I expect primary 2 may follow a similar pattern. Primary 2 may not move beyond the start of 1, above 2065.89. The key to identifying a B wave within a flat is there should be something off or wrong about them. There should be weakness. There is weakness in this downward movement. We'll see it when we get to the end of the video when we look at the technical analysis charts. So this wave count has support from classic technical analysis. Let's look at the daily chart where this high of intermediate A is this point up here. Now we're looking at the whole structure of primary 2, A, B, C, an expanded flat subdividing 3, 3, 5. Intermediate B is a corrective structure. It's a double zigzag. It is a 1.53 length of intermediate A. That's a bit longer than the common range of up to 1.38, but still well within an allowable guideline of up to 2. B is over here. C should continue higher as a 5-wave motive, 5-wave motive structure, so either an ending diagonal or an impulse, which is more likely. So far, 1 and 2 may be complete. If minor 2 continues lower, it may not move beyond the start of 1, below 1616.14. At this low, it looks like a pretty obvious 3-wave structure. Minor 3 may now begin next week. Upward movement for minor 3 should show an increase in upward momentum beyond that seen for minor 1. So if we do start to see upward movement, I would expect it to show an increase in momentum and have support from volume. At the weekly chart level, this is an alternate wave count for the bearish wave count. What if primary 2 was over here as a very brief shallow zigzag? It's possible primary 3 may have begun to the downside, but there's some weakness in this downward movement. It doesn't look like the start of a third wave. It looks more likely to be a B wave. And if primary 2 is over here, it's very brief and shallow. So this has to be judged as an alternate wave count, but I want to chart it and provide it for you to illustrate the risk to the downside to that first main preferred Elliott wave count. It is possible that a third wave at 3 degrees is in a very early stage. If that's the case, we should see a really strong imminent increase in downward momentum with push from volume is quite likely. Intermediate 2 may not move beyond the start of 1 above 1805.22. At the weekly chart level, this is the bullish wave count. It differs from the bearish wave count in seeing the bear market to the low in December 2015 is completely over, and there Grand Supercycle 4 ended and Grand Supercycle 5 begun, with Supercycle 1 an incomplete 5-wave impulse. Primary 1 and 2 are complete, well off to the left of the chart. Here's the end of 3. 4 could be over here, 5 could be in an early stage. This wave count has multiple problems in terms of Elliott wave, and I outline those in the text article for you. Some of them are well off to the left of the chart. They still exist, so I do still have to consider them, and they reduce the probability of this wave count. The problem now on this chart here is the structure of cycle 4 is a double zigzag, doesn't have a normal look. Primary wave Y has deepened the correction beyond the end of W, which is its purpose, but not by much, and primary X is very deep and time consuming. X waves within double zigzags are normally brief and shallow, and that's because double zigzags should have a strong counter-trend slope. They should not be akin to sideways consolidations. They shouldn't have a sideways look, and this one does. It just doesn't look like a normal double zigzag, and so again that reduces the probability of this wave count. If it's correct though, and if your own analysis for gold is bullish, you may choose to follow this as your pathway. The target is for cycle 5 to reach equality in length with cycle 3 at 2526. Cycle 1 was brief and short. This target expects both cycle 3 and 5 to be long extensions. At the daily chart level, if cycle 4 is over there, cycle 5 should have begun. I'll label this minor 1 and 2. 2 can't move beyond the start of 1, below 1616.14. Okay, classic analysis. Now, how did the week close for gold? A downward week, a lower low, a lower high, but a decline in volume. Last week, a bearish upper wick suggested downward movement. This week, that's exactly what we've got. Look out for next support about 1620, 1625. A decline in volume suggests that price is falling of its own weight this week. This could be volume for the downward week is weaker than previous upward weeks, both of them, and so this suggests that this is a counter trend movement. The new trend may be up. There is weakness in this downward movement to this last low. There is bullish divergence after money flow index just reached oversold. There's also bullish divergence between price and stochastics. It's fairly short term, but I don't think that bullishness or the bullish divergence is going to be relieved by just this one upward week. This looks like the possible start of a counter trend movement, and they do tend to be choppy and overlapping, so this downward week within it absolutely fits normal expectations. On balance volume is within a weak range. There's no signal. ADX again indicates a downward trend. Money flow and stochastics and money flow and RSI both neutral, but stochastics returning to neutral. At the daily chart level, downward movement here did have strong push from volume in this session, but this is an outside session with a really small real body that only just closed red, so It's not really clear within this particular session if the balance of volume was up or down. What we can say from the following session, it's obviously a downward session for Friday, a lower high, a slightly lower low, a strong or decent range to the real body, and a close close-ish to lows, has declining volume. So price is falling of its own weight within this last session. On balance, volume is at support. This may assist to hold a fall in price. Next support 1630 if we do see more downward movement next week. ADX is indicating a downward trend at the daily chart level as well, but here it's above both DX lines, so this is not a strong bearish signal. The trend is already extreme. RSI and money flow back in neutral territory after exhibiting bullish divergence and after reaching oversold. This is the same as what we see at the weekly chart level. At the daily chart level, it's a little bit clearer, and this strongly suggests that there's some weakness in this downward movement. This fits with the idea of it being a B wave and not necessarily the start of a third wave. So this divergence here supports the main Elliott wave count, as does ADX, now showing that this little pullback here already is extreme because the ADX line is still above both DX lines. Stochastics neutral, ATR increasing as price falls. That's all from me with your gold analysis this week. I hope everyone's looking forward to an awesome weekend. I'm in Ecuador now. I'll be on the road for a little bit longer before settling down on the coast to get some surf for a few weeks. So I hope after another week of travelling to get down there, I hope to be able to give you a little bit more support for free analysis that people are requesting. So hopefully that's coming up soon. Thank you for your patience.